I don't know, as a jaded millennial, and you hear all these promises that politicians make, to see the speed with which this deregulation is moving in crypto is truly, well, it's a sight to behold, you know?
Welcome back to Bitcoin.com's The Weekly for March 31st, 2025, where we will recap and digest the biggest stories in the Bitcoin and cryptoverse. My name is Graham Stone, and I'm joined by David Sensel. And this week, as the markets continue to sell off, we've got more positive regulatory news out of the U.S., big moves from TradFi players entering the Bitcoin and crypto markets, and some possible catalysts for the next leg up, including the growing Bitcoin corporate treasury theme and FTX redistributions. Before we get into it, if you like this content, don't forget to follow us and smash that like button and drop a comment. We do respond. And David especially likes to get into it in the comments with the plebs.
I do. There was a comment last week that you looked depressed, Graham. So let's see. What do you guys think? Throw them in the comments. Is Graham depressed? The guy in the bottom?
Light me up, folks. It must be done. All right, let's kick things off with a series of stories in the theme of rolling back the Gary Gensler and Elizabeth Warren anti-crypto army era. David, can you kick things off for us here?
Yeah, definitely. So first we have the FDIC ending regulation, reputational risk rules. The Federal Deposit Insurance Corporation, FDIC, in the U.S. will no longer use reputational risk as criteria for bank supervision. David Sachs, the crypto czar in America, was very pleased with this. He said, quote, "In practice, this vague and subjective criteria was used to justify the debanking of lawful crypto businesses through Operation Choke Point 2.0. Banking criteria should be objective and quantitative, not based on the potential for untrue stories." So this move aligns with guidance from the U.S. Office of the Comptroller of the Currency, OCC, and follows mounting pressure from policymakers and crypto advocates. And this story was, I think, a couple of weeks ago. So this is further continuation of that. Why does this matter, Graham?
It's all about the rules of the road being made clear, the unfair rules of the road from the anti-crypto army era finally just being scrapped.
Yeah. And really, really unfair stuff by like what Sachs was saying, like it's very subjective, right? They were able to take this kind of vague rule and then do a lot of things with it because it was so subjective. Yeah,
exactly.
What's up next, man?
We've got a story here, which is that the acting U.S. Securities and Exchange Commissioner, Chairman Mark T. Ueda, now he led the inaugural session of the agency's Crypto Task Force Roundtable on March 21st in Washington. And he used the occasion to urge the commission to move away from regulation through enforcement when dealing with crypto assets. So speaking to regulators, legal experts, and market participants, Ueda argued that the SEC should instead embrace formal rulemaking processes to bring clarity to the digital asset space. So revolutionary. Let's use rulemaking processes. Let's have a process in place rather than let's just rule by enforcement.
Yeah, I mean, Coinbase CEO, Balding Armstrong, he and others have stated their frustration over the years of that SEC system where they never clearly spelled out what they wanted crypto companies to do, and it just stifled the crypto industry in the U.S. It was just awful. So, kind of common sense regulation and common sense way to be a regulator finally coming through.
Yes, and the next story in this list of stories where regulators are issuing crypto-friendly rules is this one here. David, can you quickly explain this one? Something about derivatives.
So the CFTC scrapped a directive singling out digital asset derivatives. Basically, there was this rule treated crypto derivative assets separately from other products because I think that they said it was more dangerous or more risky or had to be they had to protect consumers. And this story is basically removing this kind of ridiculous idea that digital asset derivatives are somehow separate from all these other kind of derivative products or other assets like that. So again, just basically saying, no, we're gonna treat these crypto things in the same way that we're gonna treat the other financial products of the same category.
Okay, so more common sense rulemaking and guidance coming out of the CFTC. Next up, we've got the IRS rule, which was one of the most absurd rules proposed in the crypto space ever. Basically, it made it mandatory for decentralized platforms like Uniswap, lending protocols like Aave, even self-custody wallets like the Bitcoin.com wallet would have had to report everything about their users, all the transactions, in order to comply with the IRS rules. This was an insane rule. It was
like a bank, right? Like you had to do it like a bank.
In the way that they would have had to do it at the same way that a bank would have had to do it, even though it's all basically it would have been impossible to comply. Lawmakers finally realized and gathered together and rejected this rule. And now the latest news is that basically it's at Trump's desk, so it's a signature away from being scrapped entirely.
Amen. Again.
Amen.
Long time coming. Everybody wanted this out, and like you said, it's so dumb. It's so dumb. And now finally, all Trump has to do is put his big and beautiful signature on it with his giant Sharpie pen. And away we go.
That man a Sharpie.
Give him a Sharpie.
All right, so we've got a few more stories in this theme. The next one, Arthur Hayes has been pardoned. The founder of BitMEX there was some legal drama. He's been pardoned. We also have Hawk Tuah Girl. The case against Hawk Tuah Girl is over. The SEC has stopped its investigation. It's just more signal that from the government that the SEC is taking a hands-off approach, and I think we're likely to see more of these types of launches in the future because of this. What is this all signaling?
This is all signaling, and by the way, right? Almost all these stories that we talked about are from this past week, right? Like pretty amazing stuff to begin with, just to kind of remind yourself how quickly things are changing in the U.S., right? And this signals that Trump is delivering on his promise to end this anti-crypto, anti-innovation regulation that was really during the Biden admin and maybe before was trying to kill crypto in America, right? Deregulation is here. You can see it just in this past week. Look at all these stories that we've just talked about. And it's going to allow this industry, crypto, to grow and prosper like it's never done before in the U.S., right? And over the next few years, you're going to see 1,000 flowers bloom in the U.S., dozens of new crypto companies springing up, and America becoming kind of I would say regaining its prominence as a place for crypto in the world, right? Like Singapore or Dubai. I think America is going to be right there with them. It's going to be great for the American economy, and more importantly, good for financial freedom, good for moving crypto and crypto innovations forward. So it's truly exciting stuff. And I don't know, as a jaded millennial, and you hear all these promises that politicians make, to see the speed with which this deregulation is moving in crypto is truly, well, it's a sight to behold,
Yeah, the government seems to be getting things done. And we're already seeing, I think, the results of their efforts, some of the fruits of their efforts. For example, we've got eToro. So eToro has filed for an IPO, initial public offering in New York. And in the IPO filing papers, they revealed that their revenue tripled in 2024. And relevant for us, that was driven overwhelmingly by crypto tradings, which accounted for 96% of its earnings. And they are seeking to raise up to $400 million at a $4.5 billion pre-money valuation. So I think this story demonstrates just how valuable the industry is, even at this nascent stage. But I think there maybe others be some implications here as well.
Yeah, absolutely. And next we have BlackRock, TradFi juggernaut, teamed up with Securitize, and they introduced a new share class for their 1.7 billion tokenized U.S. Treasury fund onto the Solana blockchain. This is a pretty significant milestone for real-world asset adoption on Solana. I know everybody on the timeline who is a Solana supporter, they were kind of bull posting and rubbing it into Ethereum people's noses, like, hey, here we go, BlackRock's moving onto Solana. So yeah, I think this is also kind of very bullish. They're branching out from Bitcoin to Ethereum and then down to Solana, which to me is very funny because it kind of resembles the crypto journey of most people, right? You start at Bitcoin, maybe move to Ethereum, then Solana. Soon you're in the trenches trading some pump.fun shitcoin. Who knows? You can see BlackRock build a fund dipping into pump.swap.
Just going back for a minute to the eToro story. So I think another important significance of this story is the fact that because eToro is doing this now, they're IPOing, they're doing their IPO in the US now. I think it demonstrates that they are comfortable with the emerging regulatory environment in the US. They didn't do this last year. The administration has changed. There's been a lot of clear signals that regulation is going to be progressive from now on. And eToro, which, again, they trade in crypto, 96% of their revenue from crypto, they feel comfortable to go public in this environment.
Yeah, definitely. I agree. And it's telling, apparently, they were thinking about going public in 2021 during the last bull cycle, and they didn't. And I imagine what you just said has a lot to do with that. Okay,
so the fruits of the new regulatory regime are already bearing. Okay, so the last story in this theme is that BlackRock has expanded their ETF product to Europe. So having proven their success in the US, they're replicating that in Europe. It's pretty significant. Yeah.
I mean, like as you pointed out before we went live, there have been like spot Bitcoin ETF products outside of the US for quite some time now. However, we're talking about BlackRock, the largest asset fund manager in the world, and it's not even close. There is no second best. So the fact that they're doing this is different than some little podunk Polish, whatever, I don't know, Tiddlywinks, Pinocchio level ETF. No, you have BlackRock doing this in Europe. It makes a big difference.
All right, let's move on to another theme here, which is that the Bitcoin corporate treasury game is ramping up. The latest entrant into the space is Amara Holdings, the Bitcoin miner, previously Marathon Holdings, I believe, has announced that they will be selling $2 billion in stock for the purchase of Bitcoin. Some other stories related to this. In the last month, we've seen MetaPlanet adding another 150 BTC just last week. We had GameStop announcing plans to basically go full MicroStrategy, raising $1.3 billion to begin their Bitcoin treasury. Rumble earlier in the month bought 188 BTC. So the Bitcoin corporate treasury game is ramping up.
Yeah. And it's so funny how this works, right? Do you remember, Graham, when Sailors the company formerly known as MicroStrategy, started doing this, and people were predicting, if this thing works, then you're going to start to see a lot of other companies do that. And when those other companies do that, it's going to put a lot of buy pressure on Bitcoin. That was years ago. And I think we're kind of finally starting to see that kind of acceleration phase where it's obvious now to everybody that Sailor's MicroStrategy strategy has worked really well. And then the first test case was MetaPlanet, right? Which is seen, we talked about this in Token Narratives, which has seen like a 2,000% increase in its share price in 1 year. So you have the first test case, which is Sailor. Then you have the first copy of it, which kind of verifies that this thing works. I think you're going to probably just see a ton of companies now pile into this. And we're probably, I would predict at least, we're in that kind of ramping up phase where a bunch of companies are going to be like, well, now we're pretty certain that this thing can work. And you can't help but think that this is pretty bullish for price appreciation of Bitcoin. I don't know. I don't like being that bullish, but
I mean, there's no doubt about it that this is going to increase the buy pressure on Bitcoin, which, as we all know, has an extremely limited supply. It doesn't take much, and these are corporations with big pocketbooks, and more importantly, they enable access to debt. They can issue debt to buy Bitcoin, and it's a proven business model. It works. It's going to continue working, and that's going to continue being bullish for Bitcoin.
Yep.
All right, we've got one more bullish catalyst for the Bitcoin, which is that the FTX estate will begin paying out the large creditors, those who were owed more than $50,000. Those creditors will be paid out by the end of May. And they're going to get 119 cents on the dollar. So they're going to actually get more than the dollar amount at the time of the collapse. Of course, this is less than their holdings would actually be worth had they been paid in kind in crypto. Still, they will not be losing technically in terms of the dollar amount. Now, this is likely quite bullish for Bitcoin and crypto markets. And I think, as we've seen a survey, 79 from a survey that was published a month or two ago, 79% of FTX creditors actually plan to reinvest their payments into cryptocurrencies. So this is a large pool of money that is likely going to be entering the market sometime towards the end of May.
Pretty wild. And then the the next story, I guess our last story, is a financial service firm, Brown Brothers Harmon, BBH. Apparently, they're a big deal. I've never heard of them. But they published the results of their 2025 Global ETF Investor Survey. So this is a survey that's given to institutional level investors, not like investors like you and me or my mom or something like that. This is not the retail investors, right? And in that survey, 76% of the U.S. investors answered that they plan to boost crypto ETF holdings in the coming year. So people, institutional level investors are really bullish on crypto. And I'd like to say this as an aside. I'm going to write about this actually this week. I've already have a story, but I'll give you a little preview, which is, I think if you look at institutions versus like crypto Twitter, for example, the institutions are a lot more bullish crypto right now than people in crypto, you know? And this survey is an example of that. People who went to DAS, right, the Digital Asset Summit, was that 2 weeks ago, in an institutional conference event, that a lot of people said that as well, right? These institutions are, they kind of remind me of where maybe we were or people in crypto were during DeFi summer, you know? So the institutions move more slowly, and so it takes a little more time for them to kind of get up to speed, both mentally and then kind of in infrastructure. And they really are like singing the praises of decentralization and transparency and censorship resistance and stuff. Meanwhile, all the jaded people maybe on this stream right now, who've been in the trenches this cycle with pump.fund stuff and like Libra and Trump token, I feel like we are all jaded and like we don't care about these kind of axioms of crypto, right? But the institutions do, and I think that they are way more bullish on a kind of a fundamental level than we are.
Okay, so we've got strong signals from institutions indicating that if you are in the crypto trenches and you have some dry powder, now might not be the worst time to deploy it, especially as we see Bitcoin and crypto markets kind of in a free fall here the last couple of days. And there's one other thing that I'd like to note on the ETF flows, which is that traditionally ETFs have their lowest amount of flows in the first year the ETF is issued. Now, Bitcoin ETFs, I think, did a net around $40 billion of inflows in 2024, the first year. It's likely, if you look at the historical data for ETFs, it's likely that number is going to be higher in 2025 and higher yet again in 2026. The flows ramp up. They ramp up slowly. In Bitcoin's case, they started off obviously record high, like breaking records. But if history is any indication, the flows will continue.
Yep.
So,
and you know, I also just want to caveat one thing for anyone listening, right? The way that we structure this weekly thing is we basically take what we think are the biggest stories, themes of the week, and then we share them with you guys. We're not trying to necessarily do anything bullish, you know, but there is a lot of bullish stuff out there. Now you look at the price on a Sunday night right now, and it's down only for a while. I think in the short term, and I wrote about this in my newsletter last week, I could see us hitting back into the 70s, you know, and so I've been kind of pretty happy with myself on that. And so the things that we've been talking about on this weekly, which have all happened in the past week, I think are kind of more mid to long-term bullish things. So again, if you're listening to this and then looking at the price and being like, these guys are idiots, the price is going down only. Maybe different time frames.
Yeah. These are all data points that you can use to build your conviction for a mid to long term time frame in order to allow you, I think, well, for me anyway, that's how I think, to actually buy when the prices are down like this. It's hard to do that. It's always hard to do that. It's scary. But when you look at all the bullish things that are happening in Bitcoin and crypto, it can help you build conviction. So on that note, I think let's finish it off here for today. Let's end it. So thank you very much for listening. And thanks, David, for your insights as usual. We'll see you next week on the weekly update with Bitcoin.com.